1.2 seconds. That's the average amount of time a Cigna doctor spent reviewing your medical claim before rejecting it, according to the company's own internal records. In just 2 months, that same process rejected more than 300,000 claims without a single doctor opening a single patient file. Cigna is not the only one doing this. 91-year-old Gene Loken fell in his own home, broke his leg and his ankle, and was covered for 19 days of recovery under UnitedHealth's Medicare Advantage plan before a separate piece of software decided he was finished healing. His family paid $12,000 to $14,000 a month out of pocket for the rest of his care until he died. Humana is being sued over that exact same tool used on different patients under a different logo. 3 federal judges in 3 different states in the same 12 months have all refused to throw these cases out. What the court filings in all 3 cases reveal is not a glitch. It's a system engineered the same way 3 separate times by 3 companies that are supposed to be competing with each other. 6 documented ways it's built to say no to you. You already heard the number for the fastest one. Here's the first of 6. And it starts with a name almost nobody outside a courtroom had heard until a judge forced the question open. Suzanne Kisting Luang is a plaintiff in a federal case accusing Cigna of building a review system called PXDX. Cigna says PXDX exists to speed up payment on routine, low-risk screenings so its doctors can focus on the complicated ones. That's the story on paper. Here's what actually happens. The system flags a claim on a spreadsheet. A Cigna doctor drags that flag into a batch of 50 identical strangers and clears the whole batch at once. One doctor who worked the system told reporters, "We literally click and submit. It takes all of 10 seconds to do 50 at a time." Cigna's own internal spreadsheets, the ones reporters got their hands on, show doctors averaging 1.2 seconds per claim. In 2 months alone, in 2022, that system rejected more than 300,000 payment requests. One reviewer, Dr. Cheryl Dobke, personally cleared 121,000 of them in that same 2-month window. Cigna calls the reporting biased and incomplete. A federal judge dismissed some of the plaintiff's individual claims, but let the central question move forward. The plan's own paperwork required an actual medical director, not a spreadsheet. That gap is exactly why the case survived back in the spring of 2025 with no verdict yet. The second way takes the human out of the room entirely and hands the decision to a number. UnitedHealth owns a tool called predict, built by a company called Navi Health that UnitedHealth's own Optum division bought for more than $1 billion back in 2020. UnitedHealth says the tool is only ever used as a guide, one input among many, and that the real coverage decision always comes down to government criteria and the terms of a member's own plan. Feed the tool a patient and it searches a database of 6 million other patients and spits out a precise number of days of nursing care or rehab that kind of person should need. Reporters at Stat News found a different reality in the company's own internal documents. An actual performance target for staff: keep every patient within 1% of whatever number the algorithm predicts. Not a guide, the algorithm's number, treated as the final decision. The lawsuit says that this is the very machine that decided Gene Loken, the man from the top of this video, was finished healing and why his family kept covering the bill long after UnitedHealth stopped. The third way is that this is not one company's private habit. Humana, a direct competitor to UnitedHealth, runs its own denials through that very same predict tool, licensed from the subsidiary UnitedHealth itself owns. In Kentucky, a federal lawsuit says patients on a Medicare Advantage plan who qualify for up to 100 days of nursing home coverage rarely make it past day 14 before the payments stop. Same math, different logo on the letter. A federal court in Kentucky let the case move forward over that objection because the choice the algorithm forces on a sick person, keep paying out of pocket or go home too early, is itself a form of harm worth hearing out. The fourth way only shows up if you read a Senate investigation that almost nobody actually reads. In October of 2024, a Senate subcommittee found UnitedHealthcare's denial rate for this precise kind of after-hospital care climbed from 10.9% in 2020 to 16.3% in 2021 to 22.7% in 2022, the same 3 years these AI tools were rolling out. Here's why that particular shape of number is not an accident. Medicare pays these insurers one fixed amount per patient every single month, no matter how much care that patient actually uses. Every day of coverage the algorithm denies is not a lost sale, it's simply a dollar the insurer gets to keep. The fifth way is the one that makes the entire system profitable, and it has nothing to do with being right. The Loken lawsuit alleges UnitedHealth's own numbers show these AI-driven denials get overturned more than 90% of the time whenever a family actually fights back, and that the company was banking on barely 0.2% of people ever filing that fight. These two numbers come from the lawsuit itself, an allegation, not yet a proven fact. But independent government data backs the general shape of that bet. KFF, a nonpartisan health research group, found that only about 11% of Medicare Advantage denials ever get appealed at all, and yet more than 80% of the ones that are appealed get overturned every single year since 2019. The system was never built to be right, it only needed almost everyone to give up first. The sixth way shows up in what this is doing to the doctors stuck signing off on it. The American Medical Association surveyed 1,000 physicians in December of 2024. 93% said prior authorization delays care their patients actually need. Nearly 1 in 4 said a denial had already led to a hospitalization, a permanent injury, or a death. None of this means software has no place in medicine. Used well, the same kind of tool can flag a routine case for a fast approval or catch a genuine error a tired human would miss. As of January of 2024, federal rules now require an actual licensed clinician, not the software by itself, to sign off on any Medicare Advantage denial. As of January of 2025, California passed a law banning artificial intelligence from being the sole reason your care gets denied anywhere in that state. So here's what actually works if one of these three names is sitting on your insurance card. First, appeal, every single time. The real odds sit somewhere close to 80% in your favor once you do, not the 5% under the algorithms we're counting on. Second, ask for the specific clinical criteria used to deny you, in writing. Under California's new law alone, an insurer now has exactly 5 business days to answer a standard request, 72 hours if it's urgent, and 30 days for anything retrospective. That is a deadline with teeth, not a suggestion. Third, find out whether your own state has already banned AI-only denials the way California has. If it has not, that single fact is worth a letter to your state insurance commissioner, because that is what all 6 of these come down to in the end. It was never really a broken algorithm, it was a calculated bet that you would rather absorb the loss quietly than read the letter twice. So which one are you going to be? The person the math was counting on, or the one appeal, the one letter, the one phone call that proves the math wrong? This is the Income Mission. Subscribe for the next investigation into every fee your bank is legally allowed to hide from you and still calls a service.